Welcome to another Premier Partner webinar. I'm excited to be able to bring to you great content today that will dive deep into the world of alternative underwriting. Underwriting is the key to unlock your potential profit. The key to running a solid operation is to always be testing and have multiple strategies in place at once. Not only to prevent fraud, but to increase your return on investment, lower your first payment default, and stay operational if one part of your funnel has service issues. That might sound overwhelming to some, and I brought in an expert today to discuss. Oscar with Tekambi will be kicking off the webinar to discuss how Tekambi does champion challengers and how easy it is for you to implement some of the same strategies. After that, I'll be bringing in some partners to discuss new and cutting-edge products that can be bolted onto your current underwriting strategy. Hopefully, this will give you a snapshot of what potentially is out there for you to stay nimble and to stay ahead of the fraudster. All right, today I'm excited to introduce Oscar, CEO with Tekambi, and he's really going to help us dive into the world of Champion Challenge. As we dive deeper into these additional products from our premier partners, he'll give us an opportunity to explain exactly how that could be done and how you could use it properly. Again, let's welcome in Oscar with Tekambi. How you doing, Oscar?
Hey, Mike, how's it going? Pleasure to be here.
Good. I'm glad you could join us today.
Of course.
So, Oscar, I hear from a lot of lenders who want to use additional products, and I hear the word Champion Challenge thrown around a lot. Can you explain a little bit about what you see in that process and how lenders might be able to use it?
Yeah, I mean, the short answer is with Champion Challenger testing, that's something that all lenders should be doing, right? That's technically what the key successes for any size. And the end goal is really to be able to split up traffic and to, test into different scenarios so that you can acquire the right type of customer as well as overall reducing the spend, right? So with that said, Champion Challenger is something that all lenders should be doing. They should definitely have a heavy focus on it, and that's what's really going to help them drive their success and growth.
So let me ask you this question, Oscar. I hear a lot of lenders who are really concerned about it, and they don't want it. They're doing well right now. They have their waterfall approach in place. They have their underwriting tool in place. How does Tekambi make the Champion Challenge process easy for them to use?
So, through our interface, our UI, we do give clients the ability to be able to create multiple strategies, is what we call them. We call them technically vendor strategies and scorecards, right? So within the interface in itself, they have the ability to create different segments, what we call random digit generator, that's associated to every lead. So that way you can split up the traffic in any direction. So, our recommendation at least is to at least always have your champion, which would probably run maybe 80 or 90% of your traffic, and then have the additional 5, 10, or 15% on a challenger, right? Based off of that, you'll be able to use a slider that you'll be able to see in the screen here, which will give you the ability to technically split up that traffic. We do have the ability to continue that. So, some lenders might have 3 or 4 challengers as an example. Okay. But you should always be testing, right? At the end of the day, when you first come in as a lender, you pretty much get your best practices, right? You're creating the baseline of the overall market and your target audience collectively. As you continue to grow in size, right, you want to introduce other vendors, right? You might want to have different strategies. You might want to work with different bureaus. You might be looking to maybe reduce underwriting costs, right? Maybe reduce the overall processing time of the lead, as an example. So all of this is a different approach that you can take through the tool.
Okay, no, that's awesome. So I guess really, this is a great introduction for that. So one final question here, Oscar. So if I'm a lender and I'm having Champion Challenging, how do I know who's winning? How do I know what's working best for me? Is there reporting that'll be able to help me out in that?
100%. Yeah. So again, through the tool, you will have the ability to compare the different scorecards on when you've activated them, right? So you can compare one date range versus another, and then that way you can see what your drop-off rate as well as what your accept rate is. So that would be one way of looking at it. Our recommendation, again, is to evaluate. So some clients will do a learning lab, is what it's called, right? Where you're collecting a bunch of data so that you can see if that branch, right, is predictive or not. And after a certain amount of observations, right, depending on the lender's risk tolerance, you would say, you could technically evaluate and say whether that champion, has lost to the challenger, right? And then you can switch over the traffic, and then you would introduce a new challenger, right? So you'll have all of that visibility through the tool.
Okay. No, that is great insight. And just to give you a little information, the rest of this webinar, we're really going to be diving into a lot of the products, new up and coming products from really established ones that are already integrated into Tekambi. So I'm assuming if they wanted to try one of these products, it's pretty easy for them to turn it on in the tool, correct?
That is correct. Yeah. So with the vendors that we recently added on, Tekambi now supports about 55 third-party vendors. And what we've done is we make all of the data available to you, right? So there is a profile where you will be able to set credentials for each one of these vendors that you will be listening to, right, or be hearing about. And then from there, you'll be able to create different vendor strategies through the tool that will then be connected to a scorecard. And then that scorecard will be connected to your champion challenger build out.
Okay. Well, Oscar, I think this is a great kickoff to the call. I do appreciate your time today. Again, thank you for joining us.
I appreciate the time. Thank you.
As we continue exploring additional companies, it's my honor to have Don Chapman with Powerlytics jump on. Don, how you doing today, sir?
I'm doing well, Mike. Good to be here.
Don, we're doing a lot of learning about different type of companies. Can you tell me a little bit about Powerlytics?
Sure. Powerlytics, Mike, is a data company. We have built a very unique proprietary data set. It's essentially the IRS tax returns of every U.S. household going all the way back to 2004. Now, there's a lot of data in there, a lot of expenses, tax information, but most notably would be income. The data includes all the different sources of income. So you have W-2 income, you have capital gains, interest, dividends. You have all the different sources of retirement income. You have, if somebody's self-employed, we see their Schedule C income. So income is a big part of what we do. We work with a lot of banks and lenders, and the way they actually access our data is they typically tap our API. They give us a 9-digit zip code. We can serve up a very accurate estimate of someone's income, or if they actually give us a stated income, we can serve back a confidence score against that stated income.
Okay. So, we deal with a lot of income companies. What makes Powerlytics different?
So what makes Powerlytics different is really four things. Number one, we essentially have 100% coverage. If there is a U.S. address with a 9-digit zip code, we can provide an income estimate or a confidence score for that household. Secondly, as I mentioned, we're a zero friction solution, right? There's no permission needed, nothing that gets in the way of that process and disrupts that loan applicant. Third, as I mentioned earlier, we have all sources of income. There's some other data solutions that are focused only on W-2. That's fine if somebody is employed by a company, but if they're a retiree or they're self-employed, that's not going to be very helpful. So having all sources of income allows us to really cover the full gamut of any loan applicant in the U.S. And then finally is the accuracy. As I mentioned earlier, we're underpinned by the database of IRS tax returns. Some people fudge their tax returns, but most people tell the truth. So we do tend to be a very accurate source of truth, as opposed to, there's some solutions out there, Mike, that are modeled. They might take what kind of car they own, what kind of magazines they buy, and come up with an algorithm that tries to predict what their income looks like. We've done a lot of testing. We have a lot of clients who feel that what we do is actually a lot more accurate. So those are kind of the four big differentiators for us.
Okay. Now, where you think this is more of a top of the funnel type product where they really lead purchase?
Yeah, that's one area where we are getting a number of clients and seeing a lot of interest. Absolutely. And we're seeing really kind of, I guess, two use cases top of funnel. One would be for those lenders who are working a set of leads and trying to really zero in on those leads that hit their income sweet spot, right? As opposed, and those are the leads, frankly, that are going to generate the highest ROI. The other is around bidding strategies. Potentially we've seen some lenders bid more on those leads that fall within the income sweet spot and still go after, yet bid less for those that are kind of farther out from that actual target income that they're pursuing.
Well, Don, that sounds pretty exciting. I definitely recommend if people are interested in getting a pretty good income accurate score, reach out to Powerlytics. Thank you, Don, for jumping on today.
Mike, thanks for having me. Great talking to you.
All right, continuing learning about additional companies, I am lucky to have Michael Fay with SentiLink joining me today. Michael, how you doing today?
Not too bad. Yourself?
I'm doing well. So, thank you for jumping on today. We're excited to bring new and exciting companies to our lenders. So tell me a little bit about SentiLink. What do you guys do?
Yeah, you bet. So SentiLink at its core, we are basically an anti-fraud and identity validation company. And SentiLink stops application fraud at the time of application. And that can be synthetic fraud, first-party synthetic fraud, third-party synthetic fraud, and ID theft as well.
All right. So that's so you envision yourself sort of a top of the funnel type of ID system? Because I know there's a lot of ID providers out there. What makes you guys different?
Yeah, that's a great question. So I think the first thing that makes us different is our approach to fraud is very unique in the sense that all of our competitors that are out there in the market, they require the lender to report back either a fraud tag or any sort of known fraud. And we don't do that. What we have is a team of risk ops analysts, and it's really our biggest differentiator. These risk ops analysts tag live streams of applications that are coming in via our lenders, and they're providing visibility into emerging fraud vectors and informing feature developments in our models with this sampling that they do. And so every day on a real-time basis, they are sampling utilizing isotonic regression sampling within each of our score bands. Our score bands on our risk scores run from 0 to 999, and they're sampling in 10-point increments, a real live sampling. It plays into our models, and it provides human context to any score or insight that we surface. And so there's no dependency on feedback files from any of our financial institution partners.
Yeah, no, that is definitely slightly different. So, tell us a little bit about the scores, because, a lot of our lenders are buying leads and acquiring customers at different price points. So does that give it an opportunity to use the score to have a little more confidence in what they're paying for on the lead?
Yeah, absolutely. And so we've got two core scoring products. The first is our synthetic fraud risk score. And then our second major scoring product is our identity theft scoring product. The synthetic fraud risk score is broken into three pieces, actually. So you can receive three scores back. The main score is our abuse score. And what that does is it takes a look at the overall identity that's been presented, and it gives you an overall score from 0 to 999. Higher the score, the higher the risk that this is synthetic fraud. Within that abuse score, there are also two subscores that we return. First being a first-party synthetic fraud risk score, the second being a third-party synthetic fraud risk score. The difference being a first-party synthetic fraudster is typically an actual person that is manipulating their social security number because of past credit issues or trade lines that haven't been paid, etc. So they're trying to mask their true financial history. So the first-party synthetic score is also it is a very good predictor of credit risk as well. Third-party synthetic, that's more of the professional fraudsters, fraud rings, fraudsters with malicious intent. Usually it's organized, scaled criminal behavior, and the name, date of birth, and social security number are all fabricated. 0 to 999, the higher the score, the higher the risk. The second major scoring product we have is our ID theft risk score, and it's exactly what it sounds like. What is the risk that the presented identity has been compromised or stolen and is being used maliciously by a person who does not own that identity? And so we take a look at the name, the date of birth, the SSN. Those are all usually real, but typically we'll see email and phone that don't belong to that presented identity. And again, score runs from 0 to 999. Higher the score, the higher the risk that identity's been compromised.
Okay. No, that's pretty exciting stuff. So, Michael, again, thank you for jumping on today and telling us a little bit about SentiLink, and, hopefully some people can connect with you down at our conference.
Sounds great. Looking forward to it, Mike.
Awesome. Thank you.
You bet, man.
Continuing our discussion on alternative underwriting companies, let me introduce Tom Algie with Point Predictive. Tom, how are you doing today?
Thanks, Mike. I'm doing great. It's good to be with you.
Tom, we've been having a lot of conversations about different types of underwriting companies. Can you tell me a little bit about what Point Predictive does?
Yeah, happy to do so. First, I'd say Point Predictive is really proud to be a new premier partner with LendSuite. And we're excited for the opportunity to help lenders drive more revenue and prevent fraud at the same time. Our founders have a long track record of success delivering scoring models to lenders, and we've assembled a team of experts and innovators in fraud prevention. At Point Predictive, our company mantra is to be predictors. And what that means is we strive to help lenders achieve a really high level of confidence before they originate a loan.
Okay. I see on your screen here that you said you validate borrower income, employment, and identity. We've had some companies on that do all three. I know the credit bureaus also do that a little bit. Tell me why yours is better.
Well, I think the easy answer is that we use our own data science and we have exclusive data that you won't find in some of the other bureau data sets. And so we can look at the data we have on an individual's income, their employment, and their identity to accurately predict risk in real time.
Okay. No, I mean, that's good. So if I'm a lender and I want to use you, how would I use you?
Well, there's typically 3 or 4 ways that we see lenders leveraging Point Predictive, Mike. The first is they can validate the applicant's income. And it's key to know here that our solution allows them to validate the income without any friction on the consumer. We have a database of over 10,000 fictitious employers. So lenders can validate the applicant's stated employer, and they can avoid giving money to fraud rings. Lenders can use us to meet compliance for identity verification, KYC, and also in many cases, we can provide back data that might be missing when the consumer submitted their loan request.
Okay. All right. Well, Tom, that's pretty exciting. So I'm excited to see Point Predictive continue to grow and help our lenders hopefully run a little better lending operation. Tom, thanks for joining us today.
Thanks, Mike.
Okay, continuing our conversation on alternative underwriting, I'm glad to introduce Anna Burke with Accelitas. Anna, how you doing today?
I'm great today. How are you, Mike?
I'm doing great. Awesome. So we've been teaching the lenders and really showing them a lot of different underwriting strategies and different companies and how they might utilize them in their flow. So tell me a little bit about Accelitas.
Sure. And thank you so much for inviting us here today. Accelitas is really a data science shop, and we specialize sort of in 3 key areas aligned to, short-term lending industries. So we do lead screening. Our flagship product is kind of our Lift underwriting and credit scoring solution. And then we have taken kind of a unique approach to bank account validation. And so our magic is really in our data science and our predictive analytics and how we can add value for our lenders.
A lot of people have been talking about bank accounts. So tell me a little bit about the bank validation and how that could really help a lender in acquiring new customers.
Sure. So really our full product suite is derived from bank account information. We, have built close partnerships in the industry and with data providers that have given us both a lot of experience working with this sort of specialized data set, but also, allowed us through our experience to uncover really key ways where we can add value for lenders by way of that information. So I'll kind of walk through because it really starts at the top of the waterfall from the lead screening side. So again, just by way of providing us with a routing and account number, we've built a really economical solution to cut off typically it's the top or the bottom 10 to 20% of leads prior to, investing any more, spending any more on buying those leads. It's, really valuable in terms of cost per funded metrics. Then, further, once the lead is in the waterfall, our Lift underwriting score, or credit score, I should call it, gives a ton of visibility into the thin file, no file population. It's completely customizable. So, any of our existing lenders watching this know that we build out these really custom bespoke scores based on their specific requirements, their customer demographics, really what's important to them. And so we work really closely with them to create a service that's going to have the, most predictive lift for them. And so again, hugely valuable in terms of cost per funded, and then also in terms of FPD reduction, which is the metrics there. And then finally, bank account validation. So again, we have multiple approaches. We work in multiple industries, but starting with a simple check the box for NACHA ACH web debit rule compliance, up to a very advanced, rich sort of behavioral based score that goes, kind of far beyond just saying, yes, this looks like a good account. And we've actually had, a client, and, we've done webinar studies with them, but just through our bank account validation solution, it was a large police provider, generate an additional $1 million in profit by cutting their FPD.
Well, no, that sounds good. I mean, we know the lead business can be a very expensive part of our customers' acquisition strategy. So anything to help, get them better customers on the books is really key. So I know you guys are working closely with Tekambi, and hopefully we can get a lot of clients saving money, because more money they have, the more money they can lend. So that is good. So Anna, thank you for joining today. I hope you have a great day.
Thank you so much for having me.
All right, thanks. Hi, I'm honored to continue exploring, unique companies that work in our space. Please welcome Heidi Hunter with IDology to the webinar today. Heidi, how you doing?
Hey, Mike. It's so good to see you. I'm doing great.
Great, Heidi. You're glad you could jump on today. Hey, do me a favor. Tell me a little bit about IDology.
Yeah, absolutely. IDology is a leading edge identity and fraud verification service provider. We have been in the space for over, Mike, I think it's getting close to 20 years, which is pretty impressive, right? We were acquired in 2019 by GBG out of the UK, and so we are part of a global identity company. But IDology is the Americas branch, and our bread and butter is helping provide great services for customers to help them onboard legitimate customers that are going to, be good customers for their products and portfolios.
Well, no, that's awesome, Heidi. So, I mean, you guys are a little different than most companies that have been on the webinars, that you do have a pretty decent customer base. Can you tell me, some of the things that you do from the IDV side for your customers?
Yeah, absolutely. So our core solution, Expect ID, is leveraged in close to 50 different verticals. And the intention of it does serve a compliance use case, right? Helping people be compliant with the regulations they have around money movement, financial services account opening. But we also work in cool spaces like the gig economy, or in places where people have issues with fraud prevention. And specifically for the lending space, we are typically part of a waterfall, and we would be used for KYC to verify that the loan applicant or that the lead is a valid lead, it's a valid applicant. And where we really try to help your customers and the folks that we work with together, Mike, is by beyond just verifying the identity is legitimate, picking into details about that identity and trying to use those signals, right, about how often someone moves, their information about their phone account, their IP address, their email address, to help give an indication of whether this applicant is going to actually make payment on the loan. Are they going to default on it? That's really the place, us being able to give that feedback up front, right, during identity, to help promote good applicants from a loan perspective.
No, that's awesome. I know fraud plays a big part in our business, especially online. But also, I know we were talking a little bit about, you guys got some really cool products sort of outside of that you guys are working on that we're excited to roll out to our LendSuite customers, correct?
Yeah, we are. I think that's the one I'm really excited about, Mike. So we have a capability that actually automates the process of capturing and verifying a photo ID. So if part of your loan processing is to take in the driver's license, a passport, an identification card, we have a product that actually digitizes that process. So we will aid in capturing the photo, verifying it's authentic, looking for fraud through CVML and machine learning, which is pretty cool. And it also has tech wrapped around it that takes the same value that we provide in KYC about whether someone might default or whether there's problematic issues. That's wrapped around that authentication piece as well. So it's a way to digitize that process. It can be done in store, online, on a phone, on a PC, hardware scanner. But it's meant to, speed up that process, add some additional clarification around the applicant. And we think it'll be a really good fit, I think, Mike, both of us mutually for your clients. Probably the piece of it, though, I'm really excited about what I think is an interesting opportunity. Biometrics can be leveraged with this as well. You can take a selfie. That selfie can be compared to the document. obviously that strengthens the application, but it also prevents from someone trying to charge back the loan later and say, I never made this loan application. Well, if we have you on the device capturing your ID and doing a selfie, we could say that that's not accurate. So I think that's the other opportunity I'm excited about, is putting in some solid capabilities to prevent, customers from having to deal with those situations.
Well, that's pretty exciting stuff. And yeah, it's kind of hard to say, this wasn't me when I see your picture. So I agree. Well, Heidi, thank you for joining us today, and keep up the good work.
Thank you so much, Mike. Appreciate you having me.
All right. Thanks, Heidi. I would like to thank everyone for joining another episode of the LendSuite Premier Partners webinars. This one covered alternative underwriting strategies and the companies that can offer you some unique products. We started off with Tekambi, really exploring the ability to champion challenging and leveraging the technology out there to give yourself redundancy and new strategies. Because the one thing that these fraudsters will always be doing is they'll be changing. So if your underwriting strategy doesn't change, then you will be opening yourself up for additional fraud. So the companies today really provide different products all the way from the front end to IDV to the back end on the banking side. So I'd hope that you would check them out and learn a little more about them, as they do give you the opportunity to really do some customizable underwriting strategy. And we all know that the better you are in underwriting, the lower your costs are on fraud and lead acquisition and employee costs. So please continue to research these companies. And again, thank you for joining the LendSuite Premier Partner webinar. Thank you.